Alibaba Holding Limited, a Chinese e-commerce company, is surpassing its year-to-date anchoring volume-weighted average price. Keep watching to find out why you should buy Alibaba stock today. Alibaba is now building a bottom rounding pattern back above the round $300 billion market value level after recently reclaiming and holding the psychologically critical $100 region. The newly toppled 20-week moving average, a trend line that Alibaba stock followed and failed the whole way down since February of 2021, provides support for Baba shares. Chinese officials are beginning to relax rules that formerly crushed China equities, which is a macroeconomic tailwind. The business is still working to secure a crucial license for its initial public offering IPO, which would be positive for Alibaba stock. In the meanwhile, there's still hope for ANT IPO to make a comeback. Baba's 50-day put-call volume ratio at the International Securities Exchange ISE, Chicago Board Options Exchange CBOE, and Nasdaq OMX PHLX or PHLX ranks 1 percentage point below a yearly high despite calls outnumbering puts on an absolute basis. In other words, this shows that during the last 2 months, Baba puts have been purchased at a pace that's much higher than typical. Moreover, the Schaefer's Volatility Scorecard or SVS score for Baba is 95 out of 100, which indicates that over the past 12 months, Alibaba stock has consistently generated greater returns than options traders have anticipated. However, watch our next segment to see how there might still be a delisting around the corner. But before that, don't forget to subscribe to our channel, press the like button, and hit the bell icon to stay updated with our latest videos. Is there a potential delisting around the corner? After the U.S. Securities and Exchange Commission (SEC) placed the Chinese internet giant on its list of companies that might be delisted, Alibaba's stock price fell 11% on July 29th. Since the Holding Foreign Corporations Accountable Act (HFCAA), which requires the foreign companies, especially the Chinese ones, reveal their records to U.S. auditors, became law in December of 2020, Alibaba has been under pressure. According to the HFCAA, Chinese businesses will be delisted from all U.S. exchanges, including over-the-counter OTC ones, if they fail to adhere to those stricter auditing criteria for 3 years in a row. In an effort to stop these delistings, the SEC and China's Securities Regulatory Commission (CSRC) subsequently conducted negotiations. However, these conversations have not yet produced any results. The SEC has been growing a list of delisting candidates, which currently includes over 270 Chinese firms, to demonstrate that the countdown timer has already begun. Alibaba's inclusion on the list is not unexpected, given that other Chinese IT behemoths like Baidu and JD.com were previously included earlier this year. But given that news' impact on its stock price, which has already dropped by more than 70% from its record high of $317.14 per share in October 2020, is Alibaba still a good investment? Reviewing Alibaba's issues and the potential results of the delisting drama will help us determine whether or not its stock can once again attract investors. What happened to Alibaba? Alibaba seemed to be a good long-term investment as China's biggest cloud platform and e-commerce firm. But in April of 2020, China's antitrust authorities clamped down on Alibaba's e-commerce operation and levied a record punishment of $2.8 billion on it. Additionally, it was forbidden from employing excessive advertising and to lock in merchants with exclusive bargains. Alibaba's defenses against JD, Pinduoduo, and its other competitors in China's huge e-commerce sector were weakened by that crackdown. Additionally, it happened at the same time as a general slowdown in China's e-commerce as customers cut down on their purchases in the wake of the lockdown. As Chinese authorities pushed down on the internet-based services that had exploded during the epidemic, including online gaming, streaming video platforms, online education services, and other applications, Alibaba's cloud expansion also slowed. On Alibaba Cloud, several of the services were offered. Meanwhile, Alibaba's business clients reduced their expenditure on cloud services as a result of the general economic downturn in China. What happens if Alibaba is delisted? Alibaba said that it will strive to keep its New York Shares Exchange listing, but it has also recently sought to upgrade its secondary listing in Hong Kong to a dual primary listing, opening the door for mainland Chinese investors to purchase the company's stock. The modification, which could be accepted by the end of the year, might lessen the effects of a complete delisting in New York. Alibaba would probably let its American shareholders exchange their ADR shares for Hong Kong shares in such a worst-case situation. Investors would have to pay some fees for the transaction and use a brokerage that has access to the Hong Kong Stock Exchange. Until the transfer is completed, the stock could also be permitted to temporarily move to an OTC exchange. However, investors can be obliged to sell their shares if they don't have access to the Hong Kong Stock Exchange. Even for optimistic investors who are certain that Alibaba's e-commerce and cloud businesses would eventually rebound over the long run, it's become challenging to invest in the company due to all those uncertainties. Its stock still trades at barely 10 times projected profits because of this. Should you invest $1,000 in Alibaba Group Holding Limited right now? Alibaba already has significant short-term obstacles to overcome. The delisting worries only serve to further alarm its battered shares, because so many other top-notch American tech companies are still at bargain prices. It is thus impractical to advise purchasing this Chinese tech company at this time. However, you should know this before you consider Alibaba Group Holding Limited. Alibaba Group Holding Limited wasn't included in our award-winning research team's list of the 10 best stocks for investors to purchase right now, according to them. They successfully outperformed the stock market by 3 times with their 20-year online investing service Motley Fool Stock Advisor, and now believe that there are 10 stocks that are superior buys.